Another good quarter for rent growth in San Antonio, but no occupancy bump in third quarter as we typically see, and yet that's not especially concerning, and we'll tell you why. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your San Antonio update. Like most parts of the country, new supply levels are dropping off in San Antonio, and that is coming also with a drop in demand. And that's not too surprising because San Antonio is a market where there's typically a high correlation between supply and demand. As you can see on this chart here, only 1,152 units completing in the year ending September 2011. That is the lowest 12-month total since all the way back to 1995, the year that Forrest Gump won the Oscar for Best Picture. So you can see on this chart, demand is trailing off, about 2,600 units absorbed in the past year, and that's only about 1/3 of the total absorbed in the preceding 12 months. So here's what that means for occupancy rates. We're at 93.4%, up 1.1 points year over year, but no change since 2Q. Now, in many places, that would be concerning not to see occupancy progress in third quarter, but not so much here. Let's put that number in a little bit of perspective. First point is that, as you can see on this chart, occupancy rates in San Antonio tend to be lower. In fact, occupancy right now is above the decade average of 92.8%, so that is good. And second of all, the top half of the market is recovered, but there's a big gap by product age group. Occupancy rates are between 95 and 96% in apartments built in the 2000s and the 1990s, but they're much weaker in the low 90s in older properties. And third of all, rents are climbing nicely by San Antonio standards to the point where average monthly rental rates are above the pre-recession levels. In fact, 4.2% above what we saw in 4Q 2007. Now, how did that happen? Well, first of all, rents here did not fall as much during the recession relative to what we saw elsewhere in the country, so rents have been pretty stable. Year-over-year rent loss here never reached even 2% in the worst of times, and now annual same-store rent growth is at 3.1%. But that's actually a pretty big deal here. It's only the third time since 2001 that year-over-year rent change topped 3%. And one submarket to highlight for you, the Universal City, New Braunfels area, tops in the metro for both overall occupancy at 96% and annual rent growth at 5.1%. Moving forward, 2012 should be a good year for San Antonio. We could see occupancy rates get to a decade high and annual rent growth levels to continue to climb as well. And one big reason is that construction here is yet to pick up as it has in other Texas markets like Austin and Dallas. And for a lot more details and analysis on San Antonio and all the other Texas markets and those in the Southwest as well, please attend our Texas Southwest Conference in Dallas on November 15th. You get all the details at mpfresearch.com. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.